The top business stories live from the Sky newsroom. In the shadow of Donald Trump's tariff threats, Canada says there could be an opportunity for a new UK trade deal. It's not as easy as ABC for Alphabet as its share price plummets, but Google's owner commits to a massive investment in AI. And has Trivago managed to avoid the tailwinds in the travel industry? We'll be speaking to its chief executive. Yeah, very good morning on this Wednesday. Welcome to Business Live with me, Darren McCaffrey. Well, unlike Canada and Mexico, there was no 11th hour reprieve for China as US trade tariffs came into force yesterday. And a scheduled call between Donald Trump and President Xi Jinping was postponed. One of the opening salvos in the potential trade war saw the US Postal Service impose a ban on delivering parcels originating from mainland China and Hong Kong. But there was an interesting development from the other side of the Atlantic overnight, with Canada suggesting the revival of a potential trade deal with the UK in the wake of uncertainty over relations with the United States. Well, let's speak to the head of trade policy at the Heinrich Foundation. That is Deborah Elms, who joins me. Deborah, very good morning to you. Let's talk about the trade tiff, if you like, with China. Interestingly, that phone call between the two leaders was postponed, but still expected to happen.
Yeah, I think the Chinese especially have given a bit of an off-ramp here. They've said that they will apply these retaliatory tariffs and other actions, but they've given a couple of days for that to take effect. And I think the idea was to allow an opportunity for dialogue and see if some of this could be mitigated. But I think it's a bit unclear at this point whether that will actually happen for China as it did for Canada and for Mexico.
And what do you think is at play here? Because as you've rightly pointed out, actually, there is a bit of room here. Some of these tariffs haven't really come into effect, if you like, not least of all because lots of trade, as Ed Conway, our economics editor, was pointing out yesterday, is currently en route to the United States, will not be affected because it's only goods that have left after yesterday. But what does President Trump want out of this? What does he think that China is going to concede on?
Well, I think that's the giant question that we're all asking, including the Chinese. It's not obvious yet what it is that Trump is looking for. When you look at his trade agenda that he put out on Inauguration Day, it says that they want to relook at phase one, the original agreement signed under his first administration. I'm not convinced that that's really the objective. I think it's about how these two sides might come up with some kind of big, beautiful deal that would be satisfactory to both Trump and Xi. And what that looks like, I think, is still to be defined, if there is any agreement at all.
And Deborah, what's been the reaction in the region that you're in Southeast Asia? We know that actually in the past, one of the ways that people got around the initial tariffs imposed on China in the first Trump term was to go via Vietnam. What's been the reaction to this? Is there a concern that these tariffs will simply not just be confined to China?
There's growing alarm about that, and especially concerning for the region seems to be the activities over the weekend vis-a-vis Canada and Mexico, which is many countries in this part of the world thought that they had an opportunity to engage with the Trump administration, but they watched what happened with Canada and Mexico, and they said, holy cow, if America's closest trading partners can find themselves suddenly in the firing line, then what's to stop Trump from turning his attention to us, especially since many countries in this region, as you pointed out, have large and growing trade deficits viewed from Washington's perspective. That puts them at risk.
OK, Deborah, and let's talk about what I teased at the start, is that one of the potentially interesting ramifications of this tariff war is that Canada, Justin Trudeau, suggesting that maybe there could be a trade deal to be done between his country and us here in the UK.
Well, I think at this point, if you're going to really upset the trade agenda more broadly, and if you're going to make it more difficult to trade with the United States, potentially challenging to trade with China, then you're looking for allies anywhere you can find them. And I think between Canada and the UK, you have like minded partners. They already have an agreement in place in the Trans Pacific Partnership, CPTPP. They could certainly build upon that. They could think about other ways in which they could support one another. I think at this time of great disruption, again, ideas that would have been challenging are suddenly back on the table.
Isn't that the interesting point, though? Because it then forces, and I think Keir Starmer was very aware of this, does Donald Trump want people to take sides? And if you take the UK, for example, announces it wants a more integrated trade agreement with Canada, does that annoy him? And does it then make the prospect of him retaliating against us more likely? I suppose these are the calculations that governments around the world are having to make.
Yes, again, we're in a completely different world than we were in before. If I were the UK or Canada in this particular situation, I would say, look, we already have an agreement. We're part of the CPTPP. The UK just joined. This is just building on that relationship. We've had lots of, decades of experience working in deeper integration arrangements with others. This is just an extension of that. It's not meant to isolate the United States, for example. So I think maybe you could skirt your way around this. But because Trump is so changing, what he thinks in any given moment could be completely different from what he thought in the last moment.
OK, Deborah, really appreciate your time this morning, or evening as it is there in Singapore. And I have to say, it does look like you're on a Game of Thrones type chair, which I'm also very impressed by. But thank you very much indeed for joining us.
Thank you.
OK, let's move on. Shares in the tech giant Alphabet fell shortly after the company confirmed its fourth quarter results had missed revenue expectations. But the owner of Google is going ahead with a massive $75 billion investment in its AI strategy over the next 12 months, despite the recent threat from DeepSeek. Well, let's speak to Daniel Ives, Global Head of Technology Research at Wedbush Securities. Daniel, very good morning to you. Just talk us through those results that we've seen from Alphabet, of course, the parent company of Google.
Look, I think overall these are strong numbers. I mean, on the edge, missed on cloud and maybe advertising a bit weak, but look, this is a company that's on the offensive, and you see it with the CapEx build out that they're looking at. I think there's a strong growth year ahead. I mean, look, I believe any sort of sell-off, we're buyers, is one of our top picks. And ultimately, growth now looks a lot stronger over the next 12 to 18 months than it did over the last 12 to 18 months because of an advertising rebound that Google's seeing.
In saying that, they are, perhaps unsurprisingly, going to double down on AI.
Look, this is an AI arms race. And you talk about Game of Thrones before. I mean, that's essentially, it's a Game of Thrones battle in tech. And you look at 80 billion from Microsoft, 65 billion from Meta. I mean, Alphabet, they need to aggressively spend. So the street might not like this at first in terms of the aggressive spending, but that's what's happened on the AI revolution. I think that's good money, and I think ultimately that's actually bullish. And to some extent, it's actually bullish for the broader tech ecosystem, NVIDIA and others, especially when you think about the DeepSeek fears that we saw a few weeks ago with CapEx and GPUs. Big tech saying, don't worry, look at this. They're actually doubling down.
And Daniel, how much of this is a battle between companies in the United States and those in China and elsewhere, or a battle between, the big tech companies inside the US?
Yeah, I think there's two battles going on. One is big tech in the US, because when you look at this, the fourth industrial revolution, it's going to be $2 trillion spent over the next 3 years. So if you look at Alphabet, they have to worry about what Meta's doing, what Microsoft's doing, what Amazon's doing. And so there's definitely that, because right now the stronger and only getting stronger. And I think under Trump, that's probably going to be something that accelerates. Then you look at China, just like you see in terms of more and more U.S.-China cold tech war, shots across the bow from Apple, from Alphabet. So there's a battle going on between U.S. and China. So I view almost two battles going on in terms of this AI arms race, one internally in the U.S. and then, of course, one U.S. and China.
Daniel, what's interesting for me, and I'm thinking about the viewers at home, our interaction mostly with Google or with Alphabet is through Google, and it's through fundamentally the search engine, which, you know what, on a very superficial level, hasn't really changed very much in the last 20 years. You know, we still log on, we still type into that space bar what we want to find out. When is this kind of, I know we're starting to see the origins of it, but when is this kind of AI technological revolution that's going to change things like search engines? When are we at home going to start to really notice it, do you think?
Yeah, that's a great question. I think, look, in the next year, maybe even call it a little further out, it's really enterprises. I mean, this when we talk about AI revolution, the first part's going to be the enterprise. But consumers, there's going to be dramatically different things that happen from a consumer perspective in terms of advertising, apps, way to actually access this data, and almost AI assistance. That's probably going to start to happen, I think, as we go into 2026. But that's what the foundation's being led today. This is going to be a different Google, a different Apple, a different Meta, Facebook when you look out the coming years, and that's why they're spending $2 trillion of AI capex.
Okay, Daniel, fascinating stuff. Thank you very much indeed. Live there from Detroit, Daniel Ives. Thank you. Now, let's bring you up to date with some of the rest of the business stories on this Wednesday morning. And JSK is to launch a £2 billion share buyback despite the decline in vaccine sales. The pharmaceutical giant announced total sales of 31.4 billion for 2024. That's up 7% after a better than expected fourth quarter, helped by strong sales of HIV, cancer and other specialty medicines. Santander's annual profits in the UK fell by some 38%. Speculation continues over the potential closure of its British business. The Spanish-owned bank reported a fall in pre-tax profits to 1.33 billion for 2024 due to higher saving rates and a provision for possible motor finance mis-selling. And sales of electric vehicles grew by 34% in January compared to the same period last year. More than 1 in 5 new cars was an EV. That is the highest ever January figure. And the rise was driven by a strong performance from traditional European car makers, despite that competition from China. And don't forget, if you want to get more on the very latest money news, you can get it on our Money blog. All you need to do is scan the QR code that's on your screen right now, and that'll take you either to the Sky News website or the Sky News app for the very latest business news. Now, Trivago managed to avoid some of the tailwinds in the travel industry after announcing a return to revenue growth in the fourth quarter of last year. So how will the company maintain that momentum going into 2025? Well, let's speak to the CEO of Trivago, that's Johannes Thomas. Very good morning to you, Johannes. Just first of all, good news at the end of last year, a particularly strong fourth quarter.
Absolutely. Yeah. So we had 1.5 years that were very tough. We had tailwinds from Google, headwinds from Google. And we've been going through that. We've seen underlying effects that our brand marketing has been paying off over the year. And now we see it landing in our top bottom line numbers. And we're very excited to see that.
When you talk about the challenges from Google, what do you mean?
You know, Google, since many years, has been pushing into our space, self-preferencing their own product in the search results, which we are very happy the European Commission is after and asking for a level playing field. And I think that is what basically Google has done quite extensively last year, showing basically new search results, a new product in the hotel vertical. And that was something that we basically have felt in our numbers. We have offset this now with our brand investments and by improving our product substantially.
And Johannes, I'm sure lots of people at home know Trivago. If you want to go and book a hotel or a flight and accommodation, that's one of the places you can go to. What have you seen in terms of consumer trends, where they want to go, where they want to stay?
I think overall, the trend is that travel is extremely strong. It's a growth 5 to 10%. It's one of the mega markets that some people estimate to be close to the oil industry. So I think travel as such is a big trend. It's the number one discretionary expense that people have. And it's growing. People want to experience the world, and that's very, very good to see. I think what we have seen, there are security concerns around the world. So people are trading off where do they want to go. They stay a bit more closer to home, they book a bit earlier. And overall, the second concern for people is pressure on prices. So people are becoming more price conscious, and the number one topic for them is where they get good value for money and competitive prices.
Yeah, I mean, isn't that the interesting thing? As you say, people still want to go on holiday. In fact, every year you read that people are taking more breaks than ever in many regards, but they still do want that value for money, and hence why you see in Europe new markets open up. I particularly note Albania, for example, this year.
Yes, that is a trend that you can clearly see. People want to experience new destinations, especially younger demographics. More adventure, more experience, seeing new things. That's basically what people are after. Apart from then, other trends are wellness is still a big topic for people, and going out with families remains a strong trend as well.
And talk to me about this collaboration that you've got involved in with Trivago, I think. What is that all about?
Yes, so we're trying to offer broadest price comparison possible. So all players that are out there that are relevant, we're trying to compare, and they basically have a unique edge by being able to pay in crypto. They give you kickback in crypto, and that's something we're excited to have them as a partner on board as well, to give consumers more comparison options.
And just finally on that, interesting, cryptocurrency clearly being embraced by the current US administration. You are effectively kind of investing in it, if you like. Do you see this now as an actual realistic long-term part of how we're going to pay for things, that crypto is here to stay?
I absolutely think so. I'm a bit biased. I own crypto myself, so I think that's important to say probably. But I do think it is here to stay, and it's evolving. You can see there it gets institutional trust on top of kind of niche trust that it had before. And we think it will also have a place for transaction north of or apart from just having a saving similar to gold character over time.
Okay. Really interesting stuff. Thank you very much indeed, Johannes Thomas there from Trivago. Take care. Have a nice day. Thank you.
Thank you very much. Bye-bye.
Around the world there, we've been in Singapore, we've been in Detroit and Dusseldorf. You're watching Business Live here on Sky News. Coming up in just a couple of minutes, we're going to be looking at the markets. FTSE up a little today. All the details on that and much more after this quick break.
I'm Stuart Ramsey, and I'm Sky's chief correspondent.
An enormous explosion that's just come down. I think it was a monster just landed in between us.
Hundreds and hundreds of people hoping to get north, ultimately to get to the United States.
It's a border where they're not welcome, yet they keep coming.
We saw snatch squads going in, grabbing people, taking them out and putting them into trucks, but taking them away.
They make about 50 kilos of fentanyl a week. It's incredibly dangerous and toxic stuff.
There's been an upsurge in deaths. The fighting between the gangs is getting more and more vicious.
Is this now all your territory?
Yeah.
The battlefield is outside the barricades, which is over there. This is much more like a normal town. It's really sending a clear message that Venezuela is eager for change.
We've been crushed. Free from wherever you get your news. We are in the middle of a forest, in a jungle really, and they're attempting to keep these men alive. This is real, hardcore emergency medicine. The information on this could bring down the entire network, not just in Iraq and Syria, but across the world. Sky News, the full story first.
Well, hundreds of thousands of people have been using the beast for years to traverse Mexico, but it is really dangerous. Many people have died riding it.
Mandatory evacuation, you must leave!
For many people, Harvey is far from over.
People here believe the water will be this deep for weeks. I'm Greg Milam, and I'm Sky's Chief North of England correspondent.
Are you trying to run me over, Sir Philip?
No, go away.
Look like it, sir. Will you respond to those who made accusations, Sir Philip?
Can you go away?
Sky News, the full story first.
This is the game changer seat. Look, it even comes with binoculars. Fly Emirates, fly better.
Very welcome back to Sky News and Business Live. Let's have a look at those markets in a bit more detail now. Speak to Emma Wall, the head of platform investment at Hargreaves Lansdown. Very good morning to you, Emma. There you are. We're going to start, first of all, with looking ahead, if we can, to tomorrow. We're going to get this big decision by the Bank of England, and the expectation is they are likely to cut interest rates.
Absolutely. That's why you've seen pound strength today, and actually gilt yields fall, and some positivity in the FTSE 100, although only a little bit up there. And the expectation, as you say, is that the Bank of England Monetary Policy Committee will cut tomorrow. So 25 basis points is the expectation, although some are predicting as much as 50 basis points. And what's really interesting is actually how much the markets are now pricing in terms of cuts for the rest of the year. Just a month ago, the expectation was that we'd only get one rate cut this year. And at 40 basis points, it was split between whether it would just be 25 and 50 basis points for the entirety of 2025. Now, actually, the expectation is more around 85 basis points, that we'll see several cuts through the year. And this is part because inflation is beginning to get under control, and in part, I have to say, because growth has not actually come through. So those two things together, meaning actually that the Monetary Policy Committee is in a better environment in order to cut rates. But tomorrow is pretty much priced in at 25 basis points, which is why you're seeing the pound higher today and gilt yields lower.
And isn't that the fascinating thing, is that, you know, we've got a government now going for growth, many suggesting that actually the Bank of England need to focus also potentially on growth a little bit more.
Yeah, obviously the Bank of England is independent, but the data points that both the government and the bank will be looking at will be very similar. It is all about inflation. It's all about things like PMI figures that came out today, which show actually services prices went up a little at the beginning of the year, in reflection of the fact that they had to pass on actually to the consumer those increases in national insurance contributions and national living wage contributions. So the data points that the two deciding bodies, the government and the Bank of England, are receiving are the same, although they do act obviously independently of one another.
Indeed, but I assume kind of want to row in the same direction in wanting Britain to grow. And talking about growth, we know, don't we, that Keir Starmer's been torn this week between, you know, Brussels trying to reset its relationship. Some would like to see a better trade deal, and clearly Donald Trump. What do you then make of Justin Trudeau's suggestion overnight about maybe the UK should look at a better trade deal with Canada? Would that, even if we managed to get one, make much of a difference, do you reckon?
I think this is a really sticky tightrope that the government's going to have to walk, because basically it's got to decide whether it befriends the US or befriends the US's enemies. And it will really come down to, you know, the economics of actually how important those trade partners are. Canada would be a good alliance, but actually the more key one in terms of the amount of trade that we do would be with the EU. And so that is the biggest decision, actually, as to whether this government decides to lean into its arrangements with the EU at the risk of actually, you know, annoying Donald Trump in the White House, who's clearly put the EU in his sights in terms of tariffs. We don't know at what percent yet, but we do absolutely know that the EU will be hit with US tariffs. Or do they lean into the relationship with Donald Trump and in the White House? You know, Donald Trump earlier this week saying actually the UK potentially could be exempt from the global tariffs that he has announced, and not just as a pause like he has done with Canada and Mexico, but actually exempt entirely. So that is the decision actually that the government is going to have going to have to make. Strategically, who is a more important trade partner, the US or the EU? And Canada can join the EU in that lump of non-US partners, but really in terms of trade and in terms of economics, the EU is more important. I think one of the things to be mindful of here is whichever way the UK goes, indeed, these tariffs will have an impact on global stock markets. We saw a really interesting note out from Goldman Sachs suggesting that actually, the US stock market is not going to be immune from these tariffs either. Expectations that, earnings will come off around 5% because of these global tariffs.
OK, Emma, thank you very much indeed for all of that. We wait for bated breath for that decision from the Bank of England at midday tomorrow. Emma, thank you. OK, that is it from me on Business Live for the moment. Back, of course, at 4:30 this afternoon. Do join me then if you can. Up next, though, it is Prime Minister's Question Time. Live from the Commons, Kemi Badenoch and Keir Starmer. What will come up? Will it be Trump and trade? Will it be the Chagos deal that has been pretty controversial in the last couple of weeks? Join Jane Secker for that live on Sky News next. It is Prime Minister's Questions.
£6 billion in the health system. Thank you.